Welcome back. Today the markets could take a bit of a breather or perhaps see a slight fall given the global situation. The SGX Nifty is down about 70 odd points. But Anuj is here to tell us what one should do. Then Anuj, buy on dips is something that has worked. Do you think this time will be the same?
I think it will be the same, Sonia. It should be the same. I think the first trade is to simply, if you get this dip, is to buy and put yesterday's lowest stop. That's a trade, or the SGX Nifty lowest stop, and both happen to be same in any case. So I think it's aligned beautifully. Like I said, it's worked so far, but let's see. The only worry is what happened in the US overnight. Is some signs of this rally halting, especially in the Nasdaq. And of course, there's going to be this Paytm block deal, so there's going to be a bit of a pain in some of the Indian stocks as well. And market breadth has been quite weak globally as well, in India as well. Nifty might be at 18,400, but a lot of portfolios are still stuck at 17,400. But as I said, yesterday's low of 18,344 should be the first level to watch. And if it's defended and the market makes a move up, then I think the yesterday high of 18,442 perhaps could be the level to watch. Weekly expiry today, so look at the options data. Quite a bit of call writing at 18,400 and 18,500. So the level to watch is 18,458. If you start to cross that and trade above that, maybe test 18,500. All of that, of course, dependent on Nifty holding 18,340, 330 thereabout when this decline happens. I think the Bank Nifty has been the strongest index. It's almost like the English team. Almost everyone is firing. HDFC Bank, ICICI Bank, Kotak, SBI. So I guess the stop moves up to 42,200 on the Bank Nifty for longs, and 42,600 is the sort of resistance. So let's see. Mostly buy on dips has been the go-to trade, and would be interesting to see if that plays out on expiry day.
All right, Anuj, thanks very much for that. So that's the setup as things are this morning. So buy the dip should work. Ashish Chaturmutha is with us. He's Director, Head of Research at JM Financial Services. Ashish, good to have you with us here. Thank you very much. To your mind, I mean, should one watch the screen, how prices trade initial couple of, maybe the first hour or so, or you think makes sense to buy the dip straight away?
Hi, good morning, Prashant. Good morning, Anuj and Sonia. So I think, see, broadly, we are in a very strong uptrend. And as, Anuj mentioned it, 18,300 is going to be a very important support zone for the market. And if you look at structurally, after consolidating for reasonably good, almost 7 to 8 months time frame, we are now hitting fresh all-time high. And once, after a consolidation, if the Nifty retest its previous, highs, it's not going going to see a sharper correction. It's going to be a dip, and this dip should be bought as an opportunity to go long into the market. And immediate short-term data clearly indicates 18,300 is where a lot of put writing has happened. So I would be creating a long position on any dips till the time we don't see a close below 18,300. And if that's the case, then I think on upside 18,800 to 19,000 could be a trajectory which should be looking as an immediate short-term target on upside. To play this, I think banking, one should not miss the rally. And within that, I think ICICI Bank would be my top pick at this point of time, because this is one bank which has consolidated for reasonably good period of time in the last couple of weeks. One can initiate a long keeping 99 as a trading stop loss. In an immediate short term, 950 would be my short term target. But positionally, we believe ICICI Bank is poised for 1,000 rupees target in days to come. Cement is one pocket which is showing very good strength, and within that, Ultratech Cement has formed a good base and created a kind of inverted head and shoulder on the weekly charts. Here we have seen a very strong Y build up in the last couple of weeks, so one can initiate a long, keep 67.80 as a trading stop loss. On upside, 7,400 would be my short term target in Ultratech Cement. In the capital goods space, although the entire sector is in buzz, but Larsen & Toubro is one stock which is consolidating for last couple of days, and I think the way it is forming a base around 1980, 1970 trajectory, looks like stock is poised for a move towards 2100. So keep 1970 as a trading stop loss. On upside, 2100 would be my short-term target. And last but not the least is the defense space, where we are seeing very strong action in stocks like HAL and BEL. In the F&O segment. So I would like to pick BEL in today's trade. I think Bharat Electronics Limited has formed a good base. Keep 104 as a trading stop loss. On upside, 118 would be my short-term target in Bharat Electronics Limited.
Ashish, thank you very much for that. Those are stock-specific ideas. Look at the rupee go. That's a 30 paise fall straight away on the rupee against the USD. And I think this week so far is turning out to be a pretty bad one for the currency. let me see if I can see where we were, say, on the 14th, which was the start of the week, and where we are now. So 14th, the rupee was at 80.965. We are 81.645. So that's a 120 paise or so, rupee and 20 paise in just the last, what, 4 sessions, and we're just starting today's session. So this is quite incredible, the pace of the move that we are seeing. And this is, by the way, coming at a time when the dollar against major currencies is well behaved. I mean, it's not as the dollar index is shooting higher or anything. So this is a little bit rupee specific as well. We've always kind of said, I mean, the move in the rupee so far has been dollar-led, because the dollar is rising against everything and it's putting pressure on currencies, other currencies, emerging market currencies. But this leg seems to be more sort of currency specific rather than any large, big dollar move higher, which is not the case right now. But we got the management of Blue Star Sote with us. Right?
We do. Before that, I just want to mention that a couple of stocks deserve, to be brought forth. Tata Motors is down 3% on the back of the resignation of the JLR CEO. You have Tata Steel that's under pressure. There is Paytm that's down 6.5% right now. And on the upside, a couple of these names, Hindustan Zinc that we were mentioning earlier, up about 1.5%. Nykaa is trending a tad bit in the green, but otherwise it looks like it's going to be a weak start. Blue Star saw a weak set of second quarter earnings. The profit and margins came in below street expectations. The company's order book, however, looks very robust. There's a 30% rise versus last year at over 4,100 crores. B. Thiagarajan, the MD at Blue Star, joins us now to talk about that. Mr. Thiagarajan, if you can just start by telling us what is the outlook for the second half of the year. The last time we spoke to you, you said that the penetration of room ACs is rapidly increasing. It now stands at 10% from 7% earlier. What's the latest and what could the growth rates be for the second half?
Good morning, Sonia. Thank you for having me in your show. I think the second half also will be excellent for us. One, on the B2B side, there's a huge order book, and the order inflow is also still encouraging. It has not slowed down at all. I continue to see a great deal of optimism among the people who are investing, whether it is a manufacturing capacity expansion or data center or infrastructure or retail. So many projects are happening. On the B2C side, there is always a lull after Diwali till the New Year season begins. I think, as I had mentioned, room air conditioner demand also will be good in Q4. Q3 will be same as FY20, I think.
Okay. In terms of market share, your market share has been almost the same, 12-13% for the last many quarters. Any ways to scale it up, given that demand has picked up in a big way?
My assessment is that we should move from the current level of 13.25 to somewhere around 13.75 by this financial year end. Our goal to reach 15 by FY25, that stands.
Right. Mr. Thiagarajan, good morning, Prashant here. So I think market share in the room air conditioning segment is just under 14%, sir?
That's right, 13.25%.
Right. And and what's the plan from here? I mean, you were focused big time on the north markets. Is that kind of strategy complete? What should we expect in terms of penetration, growing market share in the northern markets?
We have significantly grown our market share in the northern region. Market share goal for FY25 is 15%. I am confident that we will reach there. So the objectives are simple. We will have to improve the market share to 15%, which we are on the right direction. The second thing is the margins. We should deliver 8 to 8.5% this financial year. I think our goal will be somewhere around 9% when we are at 15% market share.
What about the metro rail projects? What's the progress as far as the Bangalore metro rail is concerned? What could the expected margins be from there, and any more orders?
Quite a few orders are there. As I mentioned to you, apart from metro railway, it is data center, manufacturing. These are the segments, and in tier 3, 4, 5 towns, massive amount of retail space is getting built, and small hospitals, small hotels. So the construction cycle is on. So far, we are not seeing any kind of slowdown in terms of order inflow at all. Now, in the segment one, our margin outlook, we maintain the same. It should be somewhere around 6 to 6.5%.
So you had won this almost 400 crore order in September, right, from Bangalore Metro. When would that come through into your books? And you said there are significant orders apart from this as well. What is the quantum?
See, any kind of infra project, you can imagine it is going to be a 24-month kind of execution. So the billing will commence in next financial year and it will get completed within 24 months. That's the normal thumb rule.
And in terms of the order book from the Metro Rail, it's at about 400 crores, is it? Or has it gone up?
No, Metro Railway alone, our order book, because in Mumbai also we are executing quite a few projects, right? That it should be somewhere around 800 crores Metro Railway related orders alone.
Okay. All right, Mr. Tyagarajan, all the best. Thanks a lot for joining in and speaking to CNBC-TV18. That's Blue Star saying that there's significant pickup as far as the Metro Rail orders are concerned. And overall as well, they are bullish on the business. But let's do one thing. Let's get some 9-10 calls out of the way. It doesn't look like a bad opening. I mean, it's a mildly lower start that we're heading into, led by Tata Motors from the front, which is down 2%. And then you have HCL Tech and HDFC Bank. Sudarshan, what's the big call at 9-10?
Well, the Nifty is a buy once it stabilizes. And Berger Paints is a buy with a stop under 602.
All right, Mitesh, what about you?
Morning, Prashant. I'll go with the buy on HL. Looks like a stock will head higher. Buy with the stop below 2620 for targets of 2800.
Okay, a couple of stocks that we are watching in pre-opening, right? Exide Industries, let's just pull that up for you. The stock is in the green because the conference call details were very positive. After a long time, we have a detailed roadmap of the lithium-ion cell manufacturing foray, and they're saying that phase 1 of this lithium-ion manufacturing will start by the second half of FY25. Not just that, the management expects the production to stabilize. They have a huge capex plan of around 4,000 crores, while the second phase will need an incremental capex of 2,000 crores. They've reached out to several OEMs and they've got a very good response as far as lithium ion is concerned. And their next charge unit is also doing very well. Overall, they're supplying EV batteries to buses, four-wheelers, two-wheelers. And remember, the stock has already rallied 25% in the last 6 months. So let's see if there's some incremental gains here.
Okay, all right. Well, we'll keep an eye on this one. Going to Abhishek now. Abhishek, home first. Jeffrey seems to be quite positive on the stock.
Well, Nigel, as you mentioned, Jefferies has initiated coverage on Home First Finance with a buy recommendation and a target price of 900 per share. They say that, the company is expanding the reach to grow in affordable housing segment. So they expect, Home First Finance to deliver 30% CAGR in terms of loan growth over FY22 to 25 as they expand the network by about 60%, and they also leverage the productivity. So this would help in NII CAGR of about 28% during the same time, which could mean that the net interest margin could soften a bit. However, gross NPA will decline and credit costs will halve to 32 basis points between FY22 to 25. So they expect re-rating of the stock to be driven by the fact that EPS CAGR over the next couple of years is expected at around 24%. The ROA will be around 3.5% level, and ROE will expand to 15% over FY22 to 25 versus 12% that they have recorded in FY22. Back to you.
All right, Abhishek, thanks very much. Small housing finance company and very large growth expected, but we've seen those kind of numbers before. By the way, the stock had a big move yesterday, so be mindful of that. It was up 7% yesterday in a flat market, and this morning in pre-open it's up another 2%. But Tata Motors, let's revisit that because that is also something which should be in action. Sonia.
So as I was saying earlier, right, the CEO of the JLR business has resigned with immediate effect from the end of December. And this is of course for personal reasons, but it comes at a time when Tata Motors is going through a lot of challenges in the JLR business. Now, the Thierry Bolloré, who's the current CEO, has resigned, and Adrian Mardell will be taking over as interim CEO. Remember, in Q2, JLR lowered its guidance for FY23. The EBITDA margin guidance was lowered as well. It reported a negative free cash flow of £15 billion because of adverse working capital movement. So because of that, there could be a bit of a disappointment on the stock. all eyes will be on who the new CEO is and any kind of stability returning in the business. But for now, I'm going with red.
Okay, all right. And as we mentioned earlier as well, keep an eye out on NMDC. They have gone ahead and they have pulled back prices by around 7 to around 10%. Don't have the exact quantum, but it's confirmed. I've checked with a couple of their buyers and they've sent out notices out there. So that one could be in focus. Remember, last couple of days, the stock has reacted negatively, but that was to their numbers. Now they have the core iron ore business that's listed. So, the steel business is already out of the way. So what you're looking at is the core iron ore business. Keep an eye out on that one. Mitesh is back with us though. Mitesh, before we get into get the first tick, give us your call at around 9:10 a.m.
Yeah, I've actually chosen HL Nigel. That's a buy with a stop at 26.20 for targets of 2800.
Okay. And anything else that stands out for you as a buy, perhaps, Mitesh, in this dip?
Yeah, I think, after a long time, Zomato has come on my radar as well as Nykaa. Both these stocks had a big rally a couple of days back and then are giving a pullback. So is LIC after the numbers. So I think Zomato is something, and disclaimer that I have some interest in the stock. I think is now getting close to support levels of around 65, 64. So around that level will be a good bet with a stop below 58 for a target of around 78 to begin with and maybe even higher. Similarly, LIC also I have, it's in my long-term portfolio now. That's a buy with the stop below 625. So we can accumulate these levels and look for targets of 700 plus.
Okay, R Systems is the other stock that you should just pull up. It's having a big rally this morning. As we told you, Blackstone will be buying majority to 52% stake in R Systems. The company stating that they wanted to get a large player into the business and the street definitely likes that. 20% higher, and there will be a delisting of R Systems that takes place as well. So that will definitely be one of the stocks to watch out for. But other than that, for the market, ever since it hit that 52-week high, a bit of volatility has kicked in, a bit of profit taking as well, and that's something that you can see today. Adani Group stocks have been rallying for a while. In fact, Adani Enterprises is one stock that has been the big gainer, and that's the first tick on the index, down about 54 points on the Nifty. No great sell-off, but just a marginal cut is what you're seeing in opening trade. The Sensex is down 170 points, and the Bank Nifty is shaving off a tad bit more, down about 0.3%. Let's take a look at the losers. Expectedly, Tata Motors is your top loser after the resignation of the JLR CEO. Hindalco is down about 1.5%. Titan, Tech Mahindra are a couple of other stocks. So the Tata Group stocks are not having it good this morning. HDFC is down about 0.5%. You have Grasim that's under a bit of pressure. And steel stocks, actually, JSW Steel, Tata Steel are all in the red. IT is not too far behind either. HCL Tech, TCS, Infosys are all your top losers right now. What's bucking the trend today is Pharma. Sun Pharma, Cipla are your top gainers. Apollo Hospitals is also following suit. And then Adani Group stocks, as I mentioned, continue to charge ahead. Adani Ports, Adani Enterprises are all trending in the green line right now. And ITC is also having its moment in the sun. ITC, in fact, is now up 60% this year and continues to trend forward. Paytm, by the way, in the broader markets is down 7% after almost 5% equity changed hands. We told you about that earlier, but plenty of big moves in the broader market.
Well, that's right, Sonia. Let's pull up Hindustan Zinc. Let's see what that one's doing. Last few days, the stock has been moving higher. They've declared their dividend, but it did have a run-up ahead of that. It still opened up with a gain of closer around 2% or thereabouts. NMDC on the flip side, well, that's opened up with a cut of closer around 1% the last time I checked. So that one should come up for you. Yeah, it's down closer around 2%. A couple of other big movers from the frontline indices itself. You have Shriram Transport that's up 1.5%. You have Granules as well that's higher in trade. Keeping an eye out on the broader markets, Liberty Shoes is moving up. You have Sanghi Industries as well that's higher in today's trading session. It's up closer around 5% odd. The street believes that things will improve from here on. So Sanghi Industries is locked in upper circuit with a gain of closer around 5%. The big large trade has taken place. Paytm 5% equity changes hands out there. Explained why the stock is down 7.5% odd. It's a fourth of what it was on its listing price, but that's the large trade that's taken in there.
Nykaa is another one, Nigel. I mean, so let's look at that one. It's down another 6% on Nykaa, so that continues to drop. I mean, on Monday, the price closed at 211, and we're at 173 right now. So that's a large drop which is coming through on Nykaa. Tata Motors, of course, we mentioned, but look at Eicher Motors as well, which is down about 2%, so 34.28. Vedanta is down 1.25%, and Tata Steel is down about 1.25% as well. Mindtree, I think we mentioned that, 2% lower. And LTI is down 2% as well. So the merger consummation date now on the 14th, but both LTI and Mindtree are down. Ashok Leyland is starting about 2.5, 2.6, 2.7% lower as well. Bandhan Bank is coming up with a small. So these are, I mean, opening gaps lower, but 1%. Naukri, InfoEdge, it was up big time day before. Yesterday sold off, and it's starting about 1.5%, 2% now lower this morning as well. So advances to declines ratio is exactly 1:1. At this point. The railway stocks are back again. IRFC, we heard that from our guests in the last hour yesterday, repeatedly. IRFC, lesser talked about amongst the railway infrastructure stocks, 4% higher. It's coming up with large volumes. Global Health, which is Medanta, listed yesterday, it's up 1.7. Ircon is coming up, another railway company, 2.6, 2.7. So the momentum is there. Shriram Transport Finance is up 4.33%. That is coming up at about 1286, so that's a big one. And what else? BKG, another listing from yesterday, it's up another 2% after the 5-6% gains that we saw in trade yesterday. Abhishek mentioned Home First with a Jeffries initiation. Home First after yesterday, 7% pop is another 2.5% higher, in line with the pre-open session rates as we saw them. For now, it's a 40-point downtick on the Nifty, 18,372. Is where the index finds itself at. I mean, lower, but it's just nothing. It's a small cut, a very, very small cut. So flat is how you describe the open. Broader markets, maybe you've got a little bit more. The mid-cap index is down a quarter, and I think the small-cap index also down some more. Tahir Badshah is our market master today. He's Chief Investment Officer Equities at Invesco Mutual Fund. Tahir, great to have you with us here on the program. Thank you very much. With the earnings behind us for the second quarter, I just want to start there. Has the earnings season taken confidence away or added to the confidence? Because at the end of the day, over any reasonable time period, stocks are slaves of earnings. And if earnings growth come, stocks will do well. How has the second quarter influenced what you are estimating for the full year and beyond, Tahir?
Yeah, so Prashant, actually, more than earnings, in fact, it is earnings expectations, and earnings expectations have actually perhaps not been kind of beaten in this particular quarter's earnings. I think we've just about managed to clear the finishing line, and probably we've seen a marginal upgrade as far as the large caps or the Nifty kind of earnings is concerned, probably helped by some of the larger banks, if at all. But broadly, the entire mid and small cap space on an average seems to have probably somewhat disappointed compared to what the expectations were at the start of the season, and especially given the fact that there was a lot of expectation around a very strong festive season, etc., which somehow has not panned out to the extent we would have probably expected, or the market would have expected. And we've therefore seen some of those pockets, particularly in the consumption space, which have gone through a fair bit of moderation after the result season. So I think it's been a decent result season, but it's not necessarily led to a scenario where we would probably hope for significant upgrades from here on.
Okay, well, this is a very resilient market, I must say. The dips are getting bought, and you can see it on the headline index. The Nifty is now pulling back from the lows of trade. The Bank Nifty is almost virtually in the green, and you have big moves coming into names. Exide is up almost 2% odd. You have Castrol India that's up about 2.5%. I'm talking about the broader market movers, and many stocks hitting fresh highs as well. Tahir, good morning. I wanted your thoughts on what the approach should be in banks, because some of these banks like SBI now trading at 1.2 times price to book forward. So even valuations are getting a bit stretched here. Do you think there is still a lot more to go in this rally?
At least, banks are still one place where probably you might still, argue for a little bit of upside, and particularly maybe some upgrades in terms of earnings as well. Going forward, if let's say credit growth continues to maintain its momentum. There is, of course, on the other hand, the flip side is that we need to see deposit growth also catch up, and we need to probably focus more on the banks who can manage the overall liability situation, the liquidity situation much better than some others. So I think we need to make our choices within that space. But in general, I think that is one of the sectors where top line probably can still deliver some positive surprises. We saw some of that even evidenced in the last quarter's earnings. So I think that is still a sector where we can probably stay a lot more constructive.
Hi, Tahir. Good morning. The last trade that's taken place today is on Paytm. Some of these companies, they have really eroded wealth from the time they've listed. Valuation-wise, do you think they're coming to some kind of, sanity, or do you think that still you would completely avoid some of these themes?
No, I think a lot of the erosion that has happened is more a function of compression of multiples rather than probably the deterioration in the business dynamics of many of these companies. I think, barring a couple, I think many of them have actually done reasonably well under the circumstances and probably moved a little more closer to their promise of profitability. So I think it's more the market function. It is probably more of the technicalities which are currently going around with many of these names. So I think valuations probably are not still optically something which will be very appetizing. But at least you can take confidence in the fact that the businesses are probably delivering as per expectations or somewhat ahead of it. So there will be a stage where you would probably be able to kind of take a lot more confidence and maybe even keep either initiate positions or probably even add to some of these names.
You're sounding constructive. Is that the way to look at it? You're looking for opportunities, keeping a close eye. Maybe not acting now.
There will be at least a few of them who will probably do well over a period of time. I mean, they have reasonably decent, strong competitive advantages.
Which areas, Tahir? Because they're very diverse, right? Yeah,
it's very diverse. So you'll have to pick and choose. I mean, they could, depending upon each's own competitive advantages and how they are positioned with respect to competition, and their ability to actually fend off competition with resources which they have available at their disposal.
I've a few who've come on the program before us talked about Policy Bazaar, the insurance aggregation space. Without naming names, could you give us some sense of which are the kind of businesses you like, not the price at which they'll become attractive or anything?
Like I said, in this space, we have generally preferred companies which are perhaps a little more closer to their profitability part compared to others. We preferred companies which are probably well ahead in terms of their competitive positioning compared to others, because many of these spaces are not going to see, it's not that they're not going to see fresh competition. There will be fresh competition along the way, perhaps a little later out in time. So I think the larger the competitive differential between the next best player is something which we clearly look out for in these kind of companies. And if profitability metrics are met or held up well alongside with growth, then I think that is something which obviously is a good combination to have. So I think these are some of the traits that we are probably looking forward to in these kind of companies.
Okay, by the way, there is a big slide that you're seeing now in these platform companies. So Paytm is down almost 9% in huge volumes, of course, that trade took place. Nykaa is down about 5.5%, and a couple of others are also seeing a lot of pressure. In fact, Nykaa volumes are picking up substantially, so don't lose sight of what's happening there. Zomato as well is in the red. Tahir, we were talking about these platform companies, but there are other new listings as well recently, just in the last few days. There is Bikaji, there's Medanta. Any of these newer ones that you like from a long-term standpoint?
Well, I think we've not, to be clear, we've not really participated in many of the recent IPOs with any great figures. So I think it'll not be right for me to comment on these. Sonia.
Okay, all right, Tahir, we'll leave it at that. Thanks a lot for joining in, and have a great year ahead, and Happy New Year if we don't meet you in the next 1 month. Thanks for being with us on the channel.
Thank you very much. Happy New Year to you guys as well, and wish you all a very happy birthday. The 23rd is, I believe, coming up in the next few days.
Yes, the first week of December, so we have lots to celebrate.
And hope to see you then, Tahir. It would be wonderful. Thank you.
Thank you very much.
Okay, well, let's move on. Honeywell Automation is the company on our radar. Posted a mixed Q2 earnings, subdued with a growth of around 8%. The EBITDA margins expanded to over 16% this quarter, though. Ashish Gaikwad, who's the MD of Honeywell Automations, joins us now to talk about that. Ashish, thanks a lot for joining in. I want to first start by asking you about the exports, because, in the last 2-3 years, before the pandemic is what I'm talking about, the export situation was very strong for the company. Services exports is what I'm talking about. Can you tell us when do you plan to get back to that level? Because the expectation was that now that things have recovered, the pandemic is over, travel has come back, export services will come back in a big way, but that is not fructified in this quarter. So can you tell us going ahead, what is the expectation?
Sure. First of all, good morning, and thanks for having me on your show again. Well, as you know, our growth that you will see in the revenues will be a mix of both domestic and exports, always. And we've been maintaining a healthy ratio, as you see from the past performance of Honeywell Automation. Specifically, after the pandemic, it was muted a little bit, especially in 2020, 2021, but we see that coming back again. As you know, the exports growth for us for services is linked to the global economy. And the global economy has had some headwinds. Everybody is aware of that. But we see some, good green shoots coming up now. We've grown high single digit right now in terms of our backlog, and that's going to give us revenues in the coming quarters. At the same time, there are two mega trends globally, which still are not stopping. And that's what will give us that exports tailwind. The two of them are the digitization part in industrial sector, and also the sustainability related solutions that are in demand right now. And for both, Honeywell Automation is well poised with skills, competencies, domain knowledge. And we believe that these two mega trends is what will see us grow in the export services as well.
Can you give us some numbers? Because, export sales in FY22 was the lowest that we've seen since FY16. So when you say that there's going to be a recovery, what kind of growth are you looking at?
My crystal ball is out for repairs right now, so I want to speculate. But I think we do see some real nice tailwinds, especially looking at the pipeline that we have in the global market. And as I mentioned, the two trends, digitization and sustainability, is something that I'm very optimistic about.
All right. Hi, good morning, Mr. Gaikwad. The coming quarter is going to be on a low base. I'm looking at December 2021, you did around 860 crores. Prior to that, you did 874. So it's coming on a degrowth quarter, actually. So given that kind of a backdrop, for this quarter on a year-on-year basis, mid-teens you should get back to, right?
So, hi, Nigel. First of all, I agree with you on that analysis. And we've grown. If you see our half-yearly orders growth and the previous year also, it's in double digits. Almost a 2.5 times of the GDP growth that we see in India. And since we are a long cycle business, all of that order book that we have accumulated is going to get converted into revenues in the days to come. So we do expect a very optimistic view of our revenues.
So, Mr. Gaikwad, we are taking it as mid-teen growth for quarter 3. That is possible, at least as of now.
We'll see that. Like I said, my crystal ball is out for repairs.
Okay, all right. And you can at least tell us on the order book then. You have mentioned that a couple of times. Some of your peers have gone ahead and put out, some kind of number about how the things have shaped up. Now, the order book for, say, an ABB, they have said a 36% growth on a year-on-year basis with regard to their order book, order inflow, that is. What about for Honeywell Automation? I recall in your annual report, you will put out a good number. The external order booking had increased by close to around 31%. Is it in that vicinity, the increase?
You're right. So, like I said, it's about 2.5 times that of the GDP growth that we see at the YTD level. But also, I must mention here that it's not the volume, but the quality of orders that we really take a strong look at, right? So it's easy to increase the order books if you don't really get the right mix and therefore the bottom line focus that the company needs to have. Finally, it's all about profits that one makes. So we are very careful about how we choose our orders and therefore bring in those which are high in quality.
Ashish, the crystal ball is out for repair, maybe because microchips are in short supply. So, sorry, it's a bad joke. But are those supply chain issues largely behind, or
no,
are they?
Really.
Yeah.
I would be honest on this one. I think it's getting better every week, every month, for two reasons. One, we've sort of begun to live with this reality and we find alternatives, which is what exactly everybody needs to do. And secondly, I think people have pivoted to different chipsets, different suppliers, and therefore, while we are not out of the woods yet, we certainly are dealing with this issue much better today compared to, let's say, about 6 to a year back.
Okay. I wanted to ask you about what's happening in the industrial software space, considering that now the government will be commencing 5G rollout from FY23, which is touted to be a big positive, not just for the industry, but for players like you as well. You have this Honeywell Forge IoT platform. What kind of opportunity do you see here? I mean, you may not want to give us revenue numbers or expectations, but how large could be the opportunity size for someone like your company?
Sure. I think we are very excited about the 5G opportunities, especially in the area of industrial Internet of Things, as you mentioned. Where we are even more excited is about the sustainability agenda that each large company is taking up, the ESG bandwagon that you see moving fast. And the reason for that is when people are coming up with their net zero goals to be carbon neutral by a certain number of years, first, everybody needs to know what is that carbon footprint that they emit. And IIoT solutions, especially with the 5G as an enabler, will give them the as-is situation on what is their carbon emission footprint. So measurement and monitoring is a big part of it. We have a very strong play in those solutions in refining, petrochemicals, all those hard-to-abate industries. And that's where we see the digital sort of push and the tailwinds that we experience, apart from the regular stuff that I have talked to you about, like cybersecurity and the digitization, etc. So this is a new area, the sustainability, which is enabling the digitization.
Okay, all right, Mr. Gaikwad, some parts of the street believe that you are a semi-IT company. I wanted you to clarify if the BPO, the call center part, the IT part, is it housed in the unlisted entity or is it part of the listed entity?
Well, the listed entity very clearly houses the process and industrial automation and the software related to it, and then the infrastructure part, which is airports, metros, smart cities, hospitals, etc., etc. Right? So that's the big chunk of what we do, both for exports as well as for the domestic market, and then the associated engineering services there. And I wouldn't want to call Honeywell Automation as an IT company, right? It's not the typical IT services that you see where you may have a cost arbitrage. This is more based on industrial domain knowledge. It's more based on the skills and competencies in specific industrial and infrastructure areas. So, and I would like to therefore call ourselves as automation and software industrial company.
Okay, so that gives us clarity because, then, the more value-added businesses in the listed entity. That's the takeaway that I got from that. And the unlisted entity could be doing the other services, going by what you just told us. Finally, sir, in terms of growth, Honeywell used to grow at a faster clip in comparison to the GDP. Now, that's been lagging a little bit. So going ahead, you're not giving us any numbers, but do you expect to return to that 1.5 to around 2 times GDP growth?
Absolutely. I think that would be our goal irrespective. We would like to grow 1.5 to 2 times of GDP always. But again, with a very quality conscious, decision on the order book. And I believe it's absolutely possible. There is a element of dealing with the inflation, therefore the pricing adjustments, supply chain related challenges that we talked about. But I'm quite confident and very optimistic about 1.5 to 2 times the GDP growth, in terms of opportunities in India.
All right. So thank you very much. Great speaking with you. Appreciate you joining us with that perspective. Well, the market is not doing very much, but there are so many stocks which are moving. So look at Paytm, which is down, 9.5%. It's sharply, 545 on Paytm, not very far away from the May lows, all-time lows, by the way. Nykaa, we highlighted in the morning, 5.5 lower. Ever since the bonus shares became tradable, that's been, and I think it's lost about 10% in 2 days flat. Actually, some of these rail infra stocks have also turned the other way. Look at RVNL. They all surged in the last hour yesterday. That RVNL is down 5%, full 5% now on the day. And of course, Sonia has been pointing out Tata Motors. It's down another 2%, 422 on this one. Policy Bazaar is another one, which is down 4%. At this point, 362, Sonia.
The other one to add to this list is Global Health. I mean, it's had a very strong listing, and now the stock is up almost 9%. So big moves coming in there. Of course, large block deals as well. Global Health is the stock to focus on. Let's do one thing. Let's take a quick break. On the other side of the break, Anand Roy of Star Health and Allied Insurance will join in to talk about their Q2 numbers.